Welcome to a Market Matters update. Sean, the market seems to be consolidating at the moment. Not a lot happening. What's happening on your end? Any orders today or anything you're looking at sniping or buying at the moment?
No, it's actually very quiet, Nick, and I don't function brilliantly in a quiet environment. I like to be pumped up and very, very busy. But the market's doing exactly what we thought it would, as we've been saying in the last few reports. It's consolidating. It's had a huge rally, 12 consecutive days up, down yesterday 5 points, wow. Today it's down over 20 while we're talking. I wouldn't be surprised if it comes back a little bit further. Maybe the whole pullback can be very close to 100 points like the last one we saw within a sort of daily time frame. Overall though, I still remain bullish, but after a market goes up for 12 days, you've got to expect a bit of sideways consolidation, have a rest. You know, this week we've got CBA report tomorrow, so CBA is off a bit. All the traders are taking their profit. The investors, they don't care. Telstra, same thing. Telstra's reporting on Thursday. She's down a few cents. People taking profit on their trades, the investors staying put. So the whole thing is just making sense. People are going a bit squarer. These big reports are going to have a big impact on the market. Today, Cochlear reported it's moved $3 intraday. People can't decide whether it missed or whether it was a fantastic report. It's up now, looking strong. So overall, it's obviously a very good report. So I think overall, it's stock by stock is the thing. Yesterday we saw Ansell up 5 or 6% at one stage, closed very strong. We got that out of that a bit too early, but that's all about having a plan, having a target zone and taking it. Now if it carries on going from here, we might reassess that stock. But the index per se, a bit more sideways to me, a bit more down, a bit more sideways, and I think it should go up again.
Okay, just another thing I wanted to ask about is you were talking yesterday in the morning report about REITs and some that you may look to buy around these levels, or if not a little bit lower. Additionally to that, you've also talked about Suncorp being on your radar again. With these stocks, should the people getting the reports get these on their watch list, watch them very closely because you may be buying them soon, or is this just?
It's a bit of both, Nick. Obviously, I'm pretty committed to the market at the moment. I think I've got nearly 90% of my money is in the market. So for me to buy something, it's either got to be very, very cheap, or it's got to be a switch.
Yeah.
So with the REITs, I did make the point of saying they're not fully franked dividends. They're probably going to be good capital gain. When I saw that, actually what that made me feel was that my overall roadmap for the market is correct.
Yep.
Now the roadmap, the REITs seem to follow the index pretty well, a bit smoother actually, less hassle from the REITs. I think they're going up. I think they're still in the move up acceleration phase, but a lot more upside maybe over the next year or two.
Yep.
That's how I see the market. Suncorp got hit this morning. I've mentioned that a few days ago, and bang, someone, I think it was JP Morgan, downgraded it. Thanks guys. Down about 2.8% today. People are a bit worried about where we are in the insurance cycle, whether we're at the extreme, and they're taking a bit off the table. Technically, I still think Suncorp goes up. Again, Suncorp reports very soon, and again, people taking a bit of profit before that. That seems to be the cycle. Take profit before the report. They've had big moves, and if they don't report well, they might come off.
Okay.
But CBA, the big one tomorrow, that'll be interesting.
Okay, just one last thing I wanted to pick your brain on. There was a report recently which you actually said QBE, what you think, or potentially QBE could be the new crest of 2015. What do you mean by that? Should people be getting position, or is there a potential entry level point you'd be looking to buy the stock?
Yeah, I actually think it was slightly more expanded than that, Nick. I think last year, two of the best performing stocks were arguably two of the biggest dogs of the market of the last 5 or 10 years. Qantas and Newcrest had phenomenal years last year. Now we got one of those, which I'm really, really excited by. I don't buy airlines. I wasn't involved with Qantas. To me, that trade was purely about selling, or fundamentally about backing a company that the government guaranteed, and then of course the oil price collapsing. But you've got to look around the edges for stocks that are going to have great times. Now there's two stocks I thought this year might do that. Myer. Technically, I'm still very uncomfortable with the whole space around retail, but retail will pick up if these rates keep going lower. There will be a turning point, and Myer has bounced a bit. There's no doubt in the last week.
$1.81 or something.
Yeah, $1.81 today, exactly. So Myer caught my eye technically. It's a shame it doesn't own a bit of property, otherwise I'd get really quite excited with that one. And QBE. Now again, QBE is an insurance cycle. We've already touched on that with Suncorp. People are scared of it. It's hammered people over the last few years. It's been a horrible, horrible stock, myself included. I lost an awful lot of money back in QBE as a quasi-play, so interest rates up in the US, etc., etc. So I think what I said was if QBE has a bad report, and that's a 50-50 punt, and it goes into $10, I could easily be a buyer of that stock on a recovery. Don't forget also, QBE doesn't enjoy low interest rates. So if interest rates aren't going to go up, it's obviously more controlled by the US. If they're going to stay low for longer, And the US is obviously looking very much over its shoulder at the rest of the world economy, and we touched on that today with the morning report and the Baltic Index implying that the rest of the world economy is very, very slow. Well, that isn't good for QBE.
Yeah.
QBE want the Aussie down, well they've got that. They want US interest rates to move up. It's starting to try. It's still languishing in the mid $11 rate region. I'd put my hand up there and have a punt in a sensible volume if it went under $10. If it doesn't, I'll probably leave it alone.
Okay, awesome. Thanks a lot for that update, Sean, and thanks everyone for watching.
Pleasure.